Hello, folks. This is Raj Sastri from Raj Option Trading. Today, I want to talk about one of my favorite stocks. It's NIO Limited. It's into consumer cyclical auto manufacturers, one of the biggest auto manufacturer in China. So, with that, today is April 2nd, 2021. And according to this research here from Business Wire, so the 1.3 million EVs sold in China in 2020 represented 41% of global EV sales. Looks like China has got a major share of the EV sales, and it's just behind Europe, and China is far ahead US in terms of EV market share. And as we go forward, China's electric vehicle sales is going to grow by 50% in 2021. So looks like there is a very good growth rate when it comes to electric vehicle in China. So NIO is really very well positioned to take care of this, take opportunity from this growing market. So with that, let's jump into a little more detail about NIO and see whether it makes sense to buy the stock of NIO here or not. So by looking at NIO, people think NIO is a completely a Chinese company, but as you can see here, NIO has got branches in China in multiple places, as you can see here: Shanghai, Hefei, Beijing, and it also has branches in San Jose, California, Munich, Germany, and Oxford. So it's really a global company, even though people tend to think it's completely a Chinese company and sells cars in China. So the name NEO translates to blue sky coming, and their vision is to make future filled with the blue skies. They want to cut down all this carbon emission and combustion and all those things and be more blue. And their mission is to shape joyful lifestyle by offering premium smart vehicles. So that's where that's it's also called Chinese Tesla, because they want to produce luxury cars people enjoy riding and driving. So with that, let's jump into a little more details. Um, NEO. Let's quickly take a look at the profile. It's a company that engages in design, manufacturing of EV electric vehicles, driving innovations, next gen technologies in connectivity, autonomous driving, artificial intelligence. It's something like Tesla. It manufactures cars, it's got batteries, it's got AI, it's got autonomous driving. So it's really, everything clubbed together, just like, Chinese Tesla. And they also have access to public charging, solutions for public charging and power mobile charging trucks, battery swapping. They do a lot of these things. And they're also in China, Hong Kong, US, UK, Germany. So it's a global company. And stock price is $39. Stock price came down drastically in last month or two. And the CEO, William Lee, has got 90% approval rating, which is pretty good. He's also founder. And market cap is 61.82 billion. So it's pretty sizable market cap. And from a stock perspective, as you can see here, the company has got a very nice growth in 2020. They did 1000% returns in 2020, and now they're a little bit cooling off, so which is understandable. And from a revenue perspective, it's a $2.49 billion company and a very nice revenue growth, 133%. They have a lot of cash in hand, so they can weather any storm, and some debt which is manageable. And they got good amount of operating cash flow and free cash flow. And the founder and chairman, Bill or William Lee, he's got a good history in the auto industry. He's the founder of Bit Auto Holdings, and he was also with the multiple places. He also founded a C&I advertising company, and he was at the board of directors there. and he also co-founded Beijing Bit Auto e-commerce company. As you can see here, he sounds like a serial entrepreneur. He has done a lot of these companies and has got a lot of association to this automobile industry since the inception. And some of these news from the market, EV sales are climbing. Biden is, he backs the green tidal wave. um, NIO really sells more and more cars, and also I think NIO March deliveries are at record. So there are some good news, and there is also some bad news around the earnings that came out in March. So overall, I think stock dropped because of the earnings miss, but I think they did have some good deliveries after that. So that's a good story. And now let's go into a little more details. When you look at companies like NIO, we can't look at NIO in isolation. We got to look at other competitors in the space. So with that, these are all the competitors in the EV market, and some of these companies, as you can see here, Toyota, Honda, some of these, Ford, GM. These are the traditional car manufacturers, and now they're electrifying their cars. And that's why, as you can see here, these guys have got a little bit better gross margin, but the sales growth itself, for these traditional folks, are really negative at this point. 1 year sales are negative, and for some of these, I think even quarter over quarter is negative. But overall, I think they have to make the transformation from combustion engine to electrification. And now let's look at NIO. So NIO has got positive 59% one year revenue growth and 146% quarter over quarter revenue growth. Very impressive. And they got some institutional ownership, which is 36%, not too bad. And from a gross margin perspective, this is a little bit lower, compared to Honda, Toyota, and even Tesla, which is 21%. NIO's gross margin is a little bit lower. So I think they have to probably improve on this a little bit better. And if you compare it with Tesla, Tesla has got a price to sales ratio of 22, and NIO has got 18. So NIO is a little bit cheaper from a valuation perspective than Tesla. And it's really, if you compare it to the Green Power has got a even higher valuation, 47.9%. So I think from a valuation perspective, this company is pretty okay. And then we got companies like Nikola as an example. I think it's got a high float ratio, and it has no sales, so we can't really compare this company with Nikola. Xpeng or Xpav, as we call it, it's got good sales, and I think its ownership is also okay. I think this company Xpeng or Xpav, I think it's also trying to get its groove back a little bit. It also got sold off with this, shifting from high growth companies. So with that, I feel this company is doing pretty okay, and not too much short ratio. And if you compare it with something like Workhorse, which is a pure play solid state battery company, this company has got huge short ratio, and I think they got a negative gross margin. I think this Workhorse also has had some positive announcement that Volkswagen is going to use them, and they gave $100 million to Workhorse to work toward their you know technology innovation, which is a good thing. I think even Workhorse, for that matter, it is beaten down so much. I think probably it's a good time to make some entry, buy some stock, and take it from there. So actually, I was not talking about Workhorse. Um, the investment from Volkswagen is on QuantumScape, which is a solid state battery company. So with that, when it comes to NIO, I feel like it's already beaten down enough at this point. As you can see here, 10-day minus 4.70, 1 month minus 13.40, 3 month again negative. So I feel like it had its fair share of share dropping. I think at this point it'll start picking up a little bit and take it from there. Now let's go into little more details on fundamentals and see how the company has been doing in the past. So as you can see here from a market cap perspective, steadily increasing market cap, 6.70, 5.45, a little bit dropped here, again dropped, one more drop. But from this point here, from 331, which is I think somewhere here we had issue with the pandemic, COVID issue in China. I think from 331 they picked up and they never looked back. To 96 in 331.20, it became 8.94, and it kind of increased exponentially. And now they dropped a little bit. Now it's $16.82 billion, with this earnings miss and some of the growth stock rotation into other areas. From a revenue perspective, they've been doing solid. Last 3 quarters or so, positive, triple digit revenue increase. And from a revenue surprise perspective, they've been doing pretty nicely last 3 quarters. The latest quarter, they missed the revenue by 10.20 million, which is a big miss. And they also missed on the EPS. It's both revenue miss and the earnings per share miss. That's why stock kind of tanked. And from a gross margin perspective, there is some improvement as you can see here. And net margin is still negative, but it's getting better. And they got good amount of cash, some debt. I think they've been reducing the debt also, as you can see here. And from a PS ratio perspective, price to sales ratio, it's not bad. It's not very expensive. And shares outstanding is pretty stable, no big deal here. So overall, I feel fundamentals are pretty good for this company, with the debt which is under control, lot of cash, triple digit revenue growth. I feel it's a good from a fundamental perspective. Now let's look at little more details on the earnings statement itself. We will not run through this in great detail, but let's touch on few areas and take it from there. From a vehicle sales itself, looks like there is an increase of 130%. From a vehicle sales perspective, which is a good thing. And margin also, there was an expansion in margin, which is good. And total revenues, 133.2% increase, which is great. And gross profit, I think there is a gross profit is also is increasing, which is good. Loss is decreasing, again that's also good. And for first quarter of 2021, company expects the deliveries to be 20,000 to 20,500, which is an increase of 421 to 434%, which is very good. Total revenue also is expecting 438% to 450% from same period in 2020, which is again very good. So overall, in the earnings call, even though they missed on revenue and earnings per share, the guidance for the future quarter and year 2021 was really good. So it shows companies trying to under promise and over deliver. Maybe that's what they're thinking about at this point. Now let's go into their performance. How they have been performing. So from a yearly basis, 2018 is when they did the IPO. I think there were 2 or 3 months here they did negatively. 2019 again negative 36%. 2020 was a banner year for this company, over 1,000% increase. If you bought the stock here, you'd be sitting pretty. And 2021, they dropped a little bit because of this issue around earnings and also rotation from growth into value stocks. And if you look at the monthly performance here, somewhere here, in March, they had the earnings statement and they dropped 14%. Heading into the earnings also, they dropped 19%. That's the biggest drop they had here, one of the biggest drop. That's why market cap kind of dropped. and they also had some miss back in March 2020. So as you can see here from a pattern perspective, we'll go into this a little more in the next slide. Looks like March is traditionally a little bit tough year for NIO, as you can see from here and here. Probably maybe due to China maybe giving some subsidies around the year end. Not sure, but I can see some pattern that share drops in March a little bit and then picks up later. Now, if you look at the weekly performance, their earnings was right here on March 1st. Stock dropped big into earnings, and as you can see here, heading into earnings also it dropped. Again, it dropped during 14th and 21st of March weeks. And now it's getting some of its groove back, up 99% last week. So at the high level, looks like it's trying to improve after the earnings results, at least trying to make a comeback here. And if you look at this company and see how are they doing from an earnings history, so latest quarter earnings was released in March 1st. I think they missed big time both on revenue and EPS, and stock dropped. Earnings was March 1st, and it dropped 16% and dropped heading into earnings, dropped just after the earnings week after. So I think whenever they miss, stock drops big time. And a couple of times they beat here on November 17th. That week, stock went up by 10%. Then later that they gave up some of the stock increase here. And again in Q2 August 11th earnings, and they beat. And that week itself stock came a little bit down here, 2% down, especially because they were so much up heading into the earnings. And beat here, same story, stock did well. Whenever they were down before the earnings and they did a beat, stock typically goes up. Same story here. Stock was weak going into earnings, and even on the earnings there's earnings miss here, so stock dropped big time. Then it recovered next month, dropped some and recovered again. So whenever they miss, looks like they drop and then they recover. And if you go to next one here, December 30, 2019, they beat. See here the jump. They jumped 58% in 1 week. I mean, given granted stock price was so low here, so which makes sense. When the number is low, the percentage of change can be huge, either upside or downside. So with that, this gives a pretty good glimpse of what company has been doing. And like we talked about, looks like March is typically a little bit tough for this company. They miss March over here. 2021 March they missed. 2020 March they missed. So you can see the comparison here, something similar magnitude. So and they always recovered. When after the March is over, in the May quarter, it's all solid. Back to good numbers here. Now let's go into their monthly performance. The way to read this chart is we got the year 2021, 2020, 2019, 2018, and it gives us what the yearly performance here, 18% negative performance, and yearly high 66, yearly low 31. You can see here they got a pretty good range here. It's almost more than double from a low to high. And here in 2020 the range is even huge, $2 all the way to $55. And I think at this time stock price was very low, so range is high as usual. But generally March is a low. It's a difficult month for NIO, and down 14% here in 2021, down 32% in 2020, down 46% in 2019. So you get the idea. Next time around, when March comes, maybe March 2022, you can be, safe. You have to get out of the stock before the March earnings results. And as you go into, December, looks like December is another, month you have to watch out. It's a little bit, not too much drop. There's a little bit drop here. So, we got to watch out a little bit there. So from a pattern perspective, we have to be careful with this company around the earnings, especially March is a tough month, for this company. Now let's go into a little more details and look at the technical of this company. From a chart perspective, this is a chart from Think or Swim. And as you can see here, stock has been doing great. It's a 1 year chart, 1 year, 1 day. It's been doing great last year, and now they are dropping a little bit. Their earnings here, stock dropped, and now they're trying to make its way back. And it's below their 10-day moving average, 20-day moving average, and 50-day moving average. So right now it's trying to go above or cross the 10-day moving average at this point, and also looks like it's also trying to cross a 20-day moving average. And from an implied volatility is low. This means you can buy call option also if you want to buy. Right now stock is at $36. If you want to buy $30 call option, maybe say 3-4 months out, you could do that easily because implied vol is low. IV rank is 8%, so it's good to buy call options at this point. And from a DMI perspective, the way to read this chart is if the red line here is above the blue line, that means stock is bearish at this time. But what I like about this here is red line is trying to make its way down and the green line is trying to make its way up. So that tells me, it's really the trend is changing. Trend is shifting from bearishness to bullishness slowly but surely. And from a moving average perspective, on the balance volume is flat to up. So that means the stock is, people are buying into this share at this point, which is good. And check in money flow that shows how big money managers are doing. Looks like money is flowing into the stock, which is good. It's trying to show some strength here. I like that. It's a good indicator. So with that, I feel like by looking at this 1 year, 1 day chart, looks like stock is trying to turn around. From their big fall here after the earnings. I think it's really the curve itself is turning up, which is good. Now let's go into option chain to see what options are telling us. From an options perspective, stock price is right now at $39. And if you look at $39, it's somewhere here. And look at the open interest here on the call side. It's a huge open interest, 588, 1211. Looks like a lot of people are buying, in the money call options, which is always good. And there is huge volume here out of the money at 40, 41. And if you look at here, $60, which is almost $20 out of current price, there is a huge call volume, open interest at 10,000. And even at 65 and 70, there is a huge open interest. There are a lot of people betting this stock will go up. That's where the options market is telling us a lot of people betting out of money call option. They're also paying very low price, as you can see here, $1, 52 cents and whatnot. But still, people are betting this stock will go up. Historically, that was the case. That's why folks are really confident. And if you look at the put side of the house, people are also a little bit cautious. They are also buying put options. See here, 25 put option. There is so much. It's already in the money. Some folks are thinking it will even go below $25. And as you can see here, as we go up around current price 39, we got 1200 open interest, 45,000. So there is some open interest, even in the out of in the money put options. So by looking at this, you get an idea. By generally looking at this, the volume of call options are much higher compared to the put option volume. So to look at this a little more closely, let's look at the options statistics. So this is again on April 2nd, which is today, April 2nd, 2021. The total call volume is 572,000. Total put volume is 229,000. So that makes put call ratio as 0.41. So this tells us there are more bulls buying the call option than bears buying the put option. So as people buy more and more call option, these market makers will end up buying the shares to make sure if the stock really jumps up to 60, they need to have shares to cover themselves and make sure they're not at risk. That's why as call volume increases, market makers will end up buying the share at the current price and keep it in case they have to honor the call at a higher price. They can sell their shares. So with that, let's go into you know conclusion. What should we do now? We looked at fundamental analysis of the company. We looked at technical analysis. What should we do now? So generally, by looking at here, EV stocks, they were hit hard this year as the investors shifted out of growth industries. You have seen this in technology stocks, the software stocks, cloud stocks. Most of them, they came down pretty hard. Same story on the EV vehicle side. Also, these companies were also hard hit. And share price of this company dropped in March when the company said it's going to be suspending production for 5 days due to shortage in semiconductors. I think semiconductor shortage is really big news, which is a negative news for many of these auto manufacturers. I think we have seen this news in a couple other auto manufacturers also. On March 1, NIO reported fourth quarter results, and I think they met the expectation a little bit. I think they missed on the revenue and on the EPS. While the vehicle sales soared more than double, investors are really expecting even higher growth because they saw the stock price. It surged so much in 2020, 1,100%. So EV stocks are getting a boost from Joe Biden's push towards EV and battery operated cars. And companies also, just after the earnings, they're also reporting, more deliveries. It exceeded the forecast. So that's why, company kind of stock made a comeback because now they reported, positive delivery results. This is where companies kind of trying to do a under promise and over deliver. Looks like there's a 373% increase in the year over year the vehicle delivery. So by looking at all these fundamentals, technicals, what's going on with the company, I feel like this pullback could be a good opportunity to buy moderately and keep the stock for a while. So I think overall I feel pretty comfortable about this EV industry, especially in China. The compounded annual growth is so high. I think this company will take the fair share of the growth in this industry, and it's going to be a good purchase. With that, thank you very much. Happy investing.